Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be Wednesday, the 28th of August, 2024. So before we jump straight into our Daily Dose for today, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, no financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, let's have a quick recap what has happened in the markets yesterday in terms of the broad-based cross-asset classes performance, followed by intermarket dynamics that I'm going to share with you all for today based on the latest current context of the current movement in the global market space. And lastly, we will actually sum up with the current intraday technical outlook on the various broad-based cross-asset classes ranging from the major US dollar pair, the major stock indices, and as well as gold, XAU/USD, and West Texas crude oil. All right, so yesterday's was a rather quiet session if you look at the performance of the major US stock indices yesterday. So what we could see is a rather of a holding or a consolidation phase where we see the XPX managed to inch up a gain of 0.16%, the Nasdaq 100 is up 0.33%, and the Dow Jones Industrial Average almost unchanged at 0.02%, and the underperformer is the Russell 2000, the small cap stocks of the US stock market, down negative 0.67%. And if we will look at the heat map of the S&P 500, I would say it's a fairly muted session or mixed session where we see outperform being centered in on the semiconductor stocks, where NVIDIA managed to actually outperform the broader markets and even the Nasdaq 100 by shaping a gain of positive 1.46% as market participants anticipate or await for their earnings result that is going to be out later today at the close of the US session. That means, i.e., very early Singapore time, right after 4 a.m. 29th of August. So later I'll touch more about the intermarket dynamics pertaining to NVIDIA and why NVIDIA is important to the broader US stock market. And if you were to look at from a sectorial perspective, all right, so this is as we know that the S&P 500 can be breaking down into 11 sectors. So I could see that due to the outperformance of the semiconductor stocks yesterday led by NVIDIA, we see the technology sector outperforming the broader market. So it's a fairly mixed thing. So we see 5 sectors that managed to see positive intraday gain, ranging from technology, financial, consumer defensive will be consumer staples, healthcare, real estate, and the other 6 managed to actually inch out negative intraday losses for yesterday. So with the underperformer being the energy stocks. Why? Because the energy stocks are or energy sector within the S&P 500 is directly correlated or has a strong direct correlation with the intraday movement of West Texas crude oil. And those who recall yesterday daily dose, I do mention that after 3 to 4 days of very short movement in the WTI crude oil price, we do expect a pullback, and the pullback yesterday indeed has taken shape on the West Texas crude oil, all right, which actually down about close to about 1% by the close of yesterday US session. So later I'll touch more about the short-term intraday technical outlook on WTI crude when I covered that part over here. And also in the FX market, so what you see over here is that in the FX market, broader, this is the 5-day rolling performance of the dollar against the other major currency as of now as we are speaking. So very broadly speaking, the dollar continues to actually weaken broadly against the Swiss, the Canada dollar, the sterling pound, and against New Zealand dollar, but kind of sideways against the dollar CNH, the dollar euro, and the Sing dollar. All right, so overall we see much more potential dollar weakness coming back into the picture, and also being supported by this ongoing 2-year US Treasury yield premium that is shrinking against the rest of the world, depicted by this light blue line over here. All right, so that is the performance of the FX market yesterday. Generally, it seems to, based on what we are seeing right now, there are rather more dollar weakness than dollar strengthening at this juncture, based on the 5-day rolling performance of the dollar against the respective major currency. And as well, what I want to share with you all is today's early Asia session at 9:30 a.m. we do have a key economic indicator that is pertaining related to Australia, especially the Aussie dollar. So that also explained to us why the Aussie dollar rose against the dollar. So that is also been our expectation for those who follow our daily dose of market insights since Monday. We do have a short-term intraday bullish bias on the Aussie dollar, and it's being supported by a rather stubbornly sticky inflation situation in Aussie land, where the monthly CPI indicator managed to inch up higher, 3.5% against markets expecting 3.4%. So that could actually keep RBA, which is the Central Bank of Australia, more on the cautious side of the story. That means, i.e., very unlikely they could actually cut interest rate this year. Okay, so that actually explained to us the current rather resilient performance of the Australian dollar against the USD. All right, so that is the key economic data, as well as its related impact on the various broad-based cross asset classes that I'll share with you all. So now let us now dive deeper into the intermarket dynamics, okay, which will be much more very important, will be the earnings announcement of NVIDIA that going to be released after the close of today US session. And why is it important? Let me share with you with this particular chart over here. Okay, so this is the year-to-date performance chart of this is a performance chart. That means everything is in percentage term, as you can see on my graph of NVIDIA, the key semiconductor sector, because NVIDIA is part of the semiconductor. Then we have the mega 7, the mega cap stocks of the US, including Tesla, Apple, Meta, Amazon, Google, which is Alphabet, plus Netflix. And we have SPX, Nasdaq, and the S&P 500 equal weighted, Russell 2000, and Dow Jones Industrial Average. So what we could see since the start of this year, the entire US stock market has been carried by this AI juggernaut, which is NVIDIA. Why? Because due to its cutting edge product, or its this processor unit that is the highest end in the marketplace right now to support running sophisticated AI models. So there's a huge demand of it that drives up its earnings optimism, and it reflected in its stock price performance. So since its peak on 18th of June this year, that was the highest. So if you look at it over here, let me share with you this level here. Okay, perhaps let me put it down. Okay, so its peak year to peak performance, if you look at it, right, let me put it out here. Yeah, it's around 180%. Okay, so now after that, that corrective sell off that took shape in July all the way down to 5th of August, it came down, and right now it managed to recover back again. Okay, it managed to push up again. So this push up over here is close to 30%. So we could see that this push up in NVIDIA from the low of 5th of August managed to see a recovery in global stock indices, not inclusive of the US benchmark indices, especially the Nasdaq 100 and the S&P 500. Why? Because especially the Nasdaq 100, NVIDIA is the second or third biggest weighted market cap stocks within this key major US stock indices, Nasdaq 100, followed by S&P 500. So it do have a significant impact on the performance of these indices. Not very unlikely, very small on the Russell 2000 and the Dow Jones Industrial Average. So Russell 2000, NVIDIA doesn't have any, it's not a component stock. Dow Jones Industrial Average as well. All right. So now what we could see over here is this. Very interestingly, right, when NVIDIA broke down before the significant sell-off that took shape in 25th of July all the way down to the 5th of August, the break of this support line over here on 24th of July preceded the jump in VIX, the VIX index. So we know that the VIX index is an implied volatility index. If the VIX starts to jump by a very significant push up, that doesn't actually gels well for global risk assets, especially equity. So when the VIX starts to jump at that point in time from 24th of July, then all the way up to a peak in 5th of August, global equities actually managed to see a sell-off or a risk-off scenario, almost all of them, right? Almost, I'll say almost, okay? Not all global stock indices sell off dramatically, but most of them actually move in line, synchronizing with this weakness in NVIDIA. And right now, ever since NVIDIA starts to recover, we start to see a pickup in optimism in global risk on behavior as well. So what it actually means to us that if NVIDIA earnings result starts to disappoint at this point in time, if disappoint, because right now I will not know whether will it disappoint or will it disappoint or will it put in more optimism into the share price of NVIDIA, because I'm not an insider of NVIDIA, right? I don't know that, but we know that their potential impact exposed earning result could actually trigger either a bout of risk-off behavior or risk-on behavior in the global equity space, especially on the Nasdaq 100. So this particular share view. So now, with that in mind, right, we got to look at currently what is the market sentiment like right now as being implied by the option market, because we know that option market is a very short-term play. There's various options. Whether the option market, there are more people buying call on NVIDIA or more people buying put protection on NVIDIA. So we could actually gauge the sensitivity of the sentiment towards NVIDIA right ahead of today's key risk events, which is the earnings release of NVIDIA. So how do we do that? We can look at the option volume. So one particular website over here, we can go to bar chart. Okay, bar chart, you can actually search out for NVIDIA. This is the chain of the option chain over here. So let me explain to you all. Let me explain bigger. Okay, so just go to this website called bar chart and we search for NVIDIA put call ratio, right? So this is the particular hyperlink. Okay, so basically this is not live, this is end of day data. All right, so based on the end of day data as of yesterday's price action, so let me include in the volume. Okay, so what I could see over here, right, this is okay. Let me remove this. Yeah, so these are all the expiration date based on weekly, month, so this is the date to expiry 3 days. So the based on the latest one, that means i.e. if I am a very short-term speculator looking at very nearest option expiry for NVIDIA will be on 30th of August. That means just nice. 3 days, or I would say that it's still within the date period of NVIDIA earnings announcement. Okay, so let's look at the one that is the nearest. 3 days to expiry. So there's this put volume, call volume, total volume. All right, then there's this put call ratio. Put call volume ratio. So basically what they do over here, they get the total put volume divided by the call volume. So if we start to see a lot of people buying put, that means i.e. they are more skewing towards a sentiment that NVIDIA earnings will disappoint. If it's too extreme and if the opposite holds true, this guy got to actually very fast close their position, and it could actually lead to a spike up in NVIDIA share price. All right, but I'm more concerned because you know that this put and call volume, volume, it can be related to people who held on to a similar long put. That means at the end of the day, I want to see how many puts are being still in the market open, not close, because volume can indicate both open and close position, but I'm more concerned about open position because open position indicate risk-taking behavior. That means there's still ongoing risk that the market participant is being exposed to. So instead, we'll be looking at, okay, how do I, okay, let me put it down smaller. Yeah. Okay, we'll be looking at this one called put open interest and call open interest. So what does it mean by open interest? It means open interest, that means the total put position are still being open in the marketplace right now. Right, it's still open. That means volume that are closed and open. So this represent risk-taking position that has yet to be closed based on yesterday's data at the close of yesterday's data. Okay, so what we could see over here, right, the put call ratio, that means there are actually slightly more call than put. All right, so it's almost reaching a fair bit of 0.85, coming to almost 1. So what we could see over here is that there is a slightly more call option that is being open. That means, i.e., market participants are very likely to be slightly more optimistic about NVIDIA beating their earnings announcement, beating their earnings expectation, or will issue positive revenue or earnings guidance in the next quarter. Okay, so this is based on the expectation. Why? Because the core open position of core volume of core option is slightly more than the open position of put option on NVIDIA, which has a closest expiry 30th of August. Okay, that means in anticipation of tomorrow's risk event for NVIDIA. All right, but it's at least it's not so extreme. So extreme volume, it could be slightly below 0.5. Okay, 0.4, 0.5, 0.4, 0.3. All right, so over here, I would say it's a fairly close match. All right, almost comes to 1. So what we could see over here is that I would say that sentiment is rather neutral right now on NVIDIA. All right, on NVIDIA over here. But the key thing is because the implied volatility is very high, 148% in terms of the implied volatility. That means if there is could be because of due to this high implied volatility of more than 100%, that means even though it's a slightly fair 0.85 position, if the earnings results starts to disappoint or NVIDIA give out a rather lukewarm revenue guidance or earnings guidance for the next quarter, this particular core open position will be forced to close out their position, and that could actually potentially lead to a negative feedback loop into the share price of NVIDIA. Okay, something to bear in mind of, because even though it's fairly neutral sentiment, but the implied volatility is high. Okay, it's 148%. Okay, this is what I mean. Now, let's look at the chart of NVIDIA again. Okay, look at the technical chart. So if you look at the technical chart of NVIDIA, it also seems to us that it's in a holding pattern. Right? Ever since there is a slight breakout above this descending trend line that I drew from the current all-time high that was printed in 20th of June this year at 140.76, it didn't have a positive follow through. That means there's no higher, and instead it starts to actually shape a range. That means it can't break out above 130 level, okay, since 19th of August. All right, that's talking about last week. It's been trading in a very tideway range. All right, so that means, i.e., if it starts to, that means what we could see over here is that market participants are also not confident to push up the share price of NVIDIA, but neither they are so bearish to actually push down the share price of NVIDIA as they continues to stuck within this range. Okay. Okay, of 123.40 and 130. Okay, between this tight range over here at this point in time. So what I would say that over here is based on the current intermarket dynamics and its direct technical elements on NVIDIA chart. At this moment in time, there is no clear signs of either it will be a bull leading or a bear that is in control. But we know that if the earnings expectation starts to disappoint, or if the revenue guidance or earnings guidance out for NVIDIA is lukewarm, that could potentially lead to a negative feedback loop. Why? Because currently the put call ratio is slightly skewed towards more on the call side. That means there's more call than put. Even though the number is not very low, the put call ratio, the open interest call ratio is not very low, below 0.5 or 0.4, but because of its implied volatility is high, because that means any slight disappointing catalyst could trigger off a closure of this open interest call position, which is more than the put, and that could eventually potentially see a negative short-term negative feedback loop back into NVIDIA share price. All right, so that is the current situation right now in terms of the intermarket dynamics going to share with you for today. All right, so with that, now let us immediately jump straight into the short-term intraday technical outlook on the broad-based cross asset classes, starting with the FX market first. All right, so now let me expand my screen so that you guys could see the levels much clearer. All right, so let us start with the euro dollar. Okay, so the euro dollar, no change. It continues to trade sideways, holding above our first support level at 111.60, 111.30. So using 111 figure level as my short-term pivotal support level. Why? Because this level here coincide with the swing low of last Friday, and as well as the lower limit of this minor ascending channel that I drew from the low of 2nd of August. So as long as 111 figure short-term pivotal support holds, we'll still maintain that short-term intraday bullish bias on the euro dollar. First resistance to watch will be at 112.35, then thereafter followed by 112.85 slash 113 figure level, which also correspond to the long-term circular descending trend line since March 2008. All right, so once we hit this level over here, we will be pretty much cautious on the bullish side of the narrative. Why? Because it's hitting a major resistance level at that point in time. Right, now moving sorry, so how about the alternative scenario? So if the euro dollar starts to break down below 111 figure with an hourly close below it, then we will start to see a deeper minor corrective pullback to shape a retracement scenario towards 1.1050 followed by 110 figure level, which also correspond to the rising 20-day moving average, acting as a support, similar support area as well. Sterling dollar next. So the sterling dollar continues to meet our expectation in terms of the bullish side of the story. So what we could see over here that the sterling dollar going to inch upward and clear above the last Friday swing high. All right, so this becomes a pullback support for today. Okay, so very clearly it's been trading in a very clear, strong uptrending minor channel that I drew from the low of 15th of August. All right, so with that, over here, this will be my first support level to watch for today, but I do not put it so tight as my short-term pivotal support. I'll use yesterday's minor swing low over here as my Titan short-term pivotal support for today. So this, I will copy it. Okay, let me, okay, it's a bit hang right now. Okay, let me open up this screen. You know, okay, seems to be very slow at this juncture. Okay, so let me say it verbally first, okay, before okay, it's hang, I don't know why. Okay, so I will actually tighten the key short-term pivotal support for today at 132.30. Okay, 132.30. First minor support level to watch will be at 132.30, and this level here 131.80. 131.80 will be my tighten key short-term pivotal support for today, still keeping that short-term intraday bullish bias on the sterling dollar. First resistance to watch will be the upper limit of that minor ascending channel, and as well as confluence with the Fibo extension cluster level as well at 133.40, followed by 134.10. Okay, so let me adjust it. Hopefully this thing can be adjusted. Okay, still hang on, not sure why. Okay, let me delete this. Okay, let me put it over here. Okay, so let me put it in writing. Wow, finally it came out. Okay, so let me remove this. Okay, let me do some adjustment. Okay, 1.3180. Okay, So 1.380 tighten key short-term pivotal support to maintain the intraday bullish bias. So if this 13180 is broken down on the downside, that means the hourly close below it will invalidate today's intraday bullish bias to kickstart a much more deeper corrective pullback scenario to expose the next near-term support level at 131.30 followed by 130.40 next on the intraday basis. Okay, so that sum up the sterling dollar short-term technical outlook. Now moving on will be the Aussie dollar. So the Aussie dollar continues to trade within its short-term intraday bullish dynamic as being depicted by a series of higher high and higher low within this minor ascending channel that I drew from the low of 5th of August over here. So net overall, we are still keeping that short-term intraday bullish bias with a tightened key short-term pivotal support right now at 67.50, which is correspond to the lower limit of the minor ascending channel as well. First resistance level to watch 68.47, followed by the major resistance zone of 68.90/69 figure level. So what is this level? Why is a major resistance zone? So if you were to look at the daily chart of the Aussie dollar, okay, this 69.90 is in fact the long-term circular descending trend line all the way up from the high of 25th of February 2021. So that's close to about a 3-year resistance. All right, a three-year-old resistance level. So with that, if the price action starts to break down below 67.50 today, that means an hourly close below it, then that indicate invalidation of today's intraday bullish bias on the Aussie dollar to trigger off a much more deeper minor corrective pullback. Next near-term support level to watch will be the 67 figure level. A breakdown below it exposes the 50-day moving average acting as a support at 66.40 next. Okay, that's for the Aussie dollar. Lastly, on the FX space will be the dollar yen. So on the dollar yen, no change. Price action continues to remain capped below the short-term pivotal resistance level of 145.45. So price action yesterday almost hit this level before shaping a bearish reaction. Almost hit the current week low. So this is the current week low at this juncture, 143.45, which is Monday low, means the week to current week low, all right, intra-week low. So still no change, still using 145.45 as my short-term pivotal resistance level. Maintain that short-term intraday bearish bias on the dollar yen. First near-term support level to watch will be at this 143.45. Breakdown below it exposes 141.60/40, which is pretty much close to the 5th of August minus medium-term swing low area. Only an hourly close above 145.45 invalidates the intraday bearish bias to kickstart a mean reversion rebound scenario, exposing the next near-term resistance level at 146.50, followed by 147.50 next, which corresponds to the 20-day moving average acting as a resistance level as well. Now, with that, let us now focus our attention to the major stock indices, starting with the Hang Seng Index or the Hong Kong 33. So the Hong Kong 33, yesterday we do have a bullish bias. Price action managed to shape higher high, almost hit our resistance level that we mentioned yesterday, 18,070/18,160. Today, price action starts to actually be rather weak on the intraday basis, being reinforced by the bearish breakdown of this ascending trendline support as being depicted on the hourly RSI. I can see on my screen here. So net overall, it seems to us that on a very short term intraday basis, bearish momentum has started to resurface on the Hong Kong 33 index. All right, so this on the intraday basis. So using 80,070/18,160 short-term pivotal resistance, flip to a short-term intraday bearish bias on the Hong Kong 33. Next near-term support level to watch 17,550/17,430. So this level confluence with the lower limit of this minor ascending channel. A breakdown below this level may trigger off a much more deeper minor corrective decline to retest the 20-day moving average, acting as a support level as well at 17,270, which confluence with this minor congestion area here from 9th of August all the way up to 21st of August, 17,270. Only a push up with an hourly close above 18,170 resume this ongoing minor slash medium term mean reversion rebound scenario to expose the next near-term resistance level at 18,350, which is the minor swing high of 12th of July, and very close to the 0.764 Fibo extension level as well, taken from the low of 5th of August. So that's for the Hong Kong 33. Up next, Japan 225, no change, still remains kept below the 50-day moving average, which is also our 38,430 short-term pivotal resistance that we have since this Monday. So still no change using 38,430 short-term pivotal resistance, maintain that short-term intraday bearish bias. First near-term support level to watch will be the 200-day moving average, acting as a support level as well at 34,480. A breakdown below it may trigger a deeper kind of retracement decline scenario to retest the 20-day moving average, which is confluencing with this support zone area here at 36,885 / 36,630 level. All right, so if we do the Fibo retracement, taking from the low of 6th of August all the way up to last Friday high, okay, it corresponds to the 38.2% Fibo retracement as well. Okay, only an hourly close or breakout above 30,430 would invalidate today's intraday bearish bias, not bearish bias, invalidate today's bearish bias to see the kickstart another round of impulsive up move on the Japan 225 to resume its short to medium term uptrend movement to expose the next near-term resistance level in first step at 39,270, followed by 40,055, which is the minor swing high area of 19th of July and 23rd of July. Okay, so that's for the Japan 225. Moving on, next will be one of the major European benchmark stock indices will be the German 30. So the German 30 continues to be evolving in a short-term intraday bullish dynamic it continues to shape a series of higher high and higher low within this minor ascending channel that I drew from the low of 6th of August. And the price action on the RSI still continues to remain rather robust. There is no clear signs of a bearish divergence, and it haven't hit the overbought level yet. So with that, we'll still maintain a short-term intraday bullish bias on the German 30. With now a tightened key short-term pivotal support level that we have for today, 18,590, which is close to yesterday minus swing low, and also very close to the minor ascending channel lower limit. So as long as 18,590 short-term pivotal support holds, maintain that short-term intraday bullish bias on the German 30. The next near-term resistance level to watch will be at 18,800. Above it sees the current all-time high area at 18,935 / 19,025. Only an hourly close below 18,590 will invalidate today's intraday bullish bias to trigger a much more deeper minor corrective pullback scenario to expose the next near-term support level at 18,350, which pretty much close to the 50-day moving average. A breakdown below it, a risk of a deeper corrective slide towards the 20-day moving average, acting as a support at 18,040 next. Okay, so that's for the German 30. Moving on will be the major US stock indices. Let us start with the US Wall Street 30, i.e. the Dow Jones Industrial Average, continues to be in a bullish holding formation. It's like a bullish pennant after this swift move up from last Friday, but this bullish pennant managed to also help right exactly at the minor ascending channel support that we have in place since the low of 8th of August, right? So this will be something like our first support level to watch for today. So still no change, still using this very clear minor congestion area, resistance break, pullback, test, rebound. Okay, so this area here, 40,960 will still remains as my short-term pivotal support for today. Still maintain that short-term bullish bias on the US Wall Street 30. First resistance level to watch will be this current this high that was printed on Monday, 41,425 / 530. A breakout above it exposes 41,800 in the first step. All right, over here, which is a one-time Fibo extension. And also being supported by a bullish dynamic in the RSI as well. It's going to shape a series of higher low right above the 50 level mark, okay, indicating some form of intraday bullish momentum that is still inherent in the US Wall Street 30. But however, if the price action starts to push down and break below 40,960 with an hourly close below it, then it will invalidate today's bullish bias on the US Wall Street 30 to kickstart a deeper corrective pullback scenario. Next near-term support level to watch, 40,610, which is last Friday minus swing low. Below it exposes the 20-day moving average at 40,140 next. Okay, so that's for the US Wall Street 30. The Nasdaq 100, no change. Since Monday, we do have a neutrality stance due to mixed element, and also price action seems to be evolving within this kind of sideways range faction. Yesterday, at the start of the US session, it actually came down, retested 19,460 before bouncing off. That's the lower limit of our sideways neutrality range. So still no change, still keeping that neutrality stance of the Nasdaq 100 between 19,900 and 19,460 for now. All right, so that's sum up the intraday technical outlook on the major stock indices. So with that, now let us focus our attention to the commodities market next. So for the commodity market, gold XAU/USD. So once again, gold XAU/USD proved to be pretty much resilient. So yesterday on an intraday basis, it managed to retest the current all-time high area around 2,532 before shaping that minor pullback over here. So still no change. For sure, the 20-day moving average will be acting as a key short-term pivotal support level. First minor pullback level to watch will be at 2,500 level, this level here, which was almost more or less met yesterday as well before that push up. Then thereafter, we now see a bit of sideways consolidation again. So with that, as long as the kind of pullback didn't break below 2,473, we'll still maintain that intraday bullish bias on the gold XAU/USD. A breakout above 2,532 may trigger an impulsive up move to test the next near-term resistance zone of 2,588/595. We also the upper limit of this major ascending channel resistance or upper limit. If you look at the daily chart, this is what I mean from the low of 5th of October last year. Okay, now back to the hourly chart again. So, but however, if price action starts to have an hourly close below 2,473, that means i.e. breaking below the 20-day moving average as well, that could potentially invalidate today's intraday bullish bias on gold XAU/USD to kickstart a deeper corrective pullback scenario to expose the next support level at 2,435/2,415, which is also confluencing with the rising 50-day moving average as well. Okay, so that's for gold. Now, lastly will be West Texas crude oil. So as mentioned earlier, yes, West Texas crude oil yesterday managed to shape that retracement that we emphasized in our short-term intraday technical outlook yesterday, right below 78.40, hitting the first support level at 76.60 level mark. So with that over here, it seems to us that this particular retracement may have some way to go, as so far there is still no clear bullish divergence that's being depicted on the hourly RSI, and the hourly RSI hasn't hit a kind of an extreme oversold condition yet at this juncture. So with that, for today, we will have a Titan key short-term pivotal resistance for today at 78.40, which is very close to the 200-day moving average as well. That price action managed to reintegrate below it yesterday. Okay, so this will be my short-term pivotal resistance. Okay, this will be my normal one. Okay, let me adjust everything. Okay, so over here, a breakdown below 76.60 may expose 74.60 next, and even potentially this level over here. Okay, which is at 74. Sorry, this will be 74.60. Let me adjust everything again. 74.60. The top one is 70. Okay, why it's not showing up? Give me a minute. Okay, should be yeah 75.60. Okay, okay, so as long as this Titan key short-term pivotal resistance holds on West Texas crude oil for today, 78.40, we'll still maintain that short-term intraday bearish bias for this retracement to play out further. A breakdown below 76.60 exposes 75.60 followed by 74.60 next. So if we do the Fibo retracement of this push up from last Thursday all the way up to Monday's high, is 50% and very close to the golden ratio of 61.8% as well. Okay, but however, if price action managed to push up and clear above 78.40, that means reintegrate back above the 200-day moving average, then this continuation of this minor corrective rebound scenario within its major symmetrical triangle range configuration should see a further potential push up and invalidate today's intraday bearish bias to expose the next near-term resistance level at 79.50 followed by 80.30 next, which is the minor descending trend line, okay, that I drew from the high of 5th of July this year. Okay, so that sum up West Texas crude oil intraday technical outlook and as well as the intraday technical outlook on the major cross asset classes. So before we go, let's take a look at the calendar. Either than NVIDIA earnings announcement that's going to be out later at the close of today's US session, what other key economic indicator to look out for that may have an impact on the broad-based cross asset classes, respective broad-based cross asset classes. So so we do have I think this guy is in Asia right now. So at 115, okay, sorry, no, this is, yeah, correct. Where is it? Okay, my apologies. Let me refresh again. Okay, that was the error. Okay, so over here during 1:15 p.m. So at 1:15 p.m. you has Singapore time 1:15 p.m. you have a U.S. Federal Reserve official speaking. So I believe that he might be in Europe over here. And other than that, we do have a very quiet U.S. session, and even in the U.S. session, the only important data to look out for will be more pertaining to WTI crude oil price. Will be at 10:30 p.m. that the weekly crude oil stockpile change releasing by the EIA agency. Okay, at 10:30 p.m. Singapore time. And other than that is a rather quiet US session. Okay, so that sums up today's daily dose of market insights. So this is Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.